There's the old saying that when US sneezes, the world catches a cold, and that's exactly what's taking place in the global markets as well. So there are four basic reasons why markets all over the world did see the big decline that they did. The first, most important reason is that there are fears around the economic improvement in US. There are fears of recession. Where did that emanate from? Last week we had the Manufacturing Purchasing Managers Index, or PMI, data that came in from the US that showed a bit of contraction. Thereafter we got the jobs data that was much below street expectations, and that told you that maybe the US economy is going into a bit of a recession, and that the US Fed has held on to higher interest rates for much longer than what the street would have liked or what the economy could have borne as well. And as a result of which we saw a big decline in the US markets, big decline in the US yields as well, and that led over to all the other markets in the world itself. Reason number two was the Japanese yen carry trade unwinding. Remember, sometime last week the Japanese central bank went ahead and increased rates marginally, and that's a big detour from the near 0% rates that were there in Japan for the last 20-25 years. So a lot of people who would borrow in JPY and invest in markets that gave more than 0% returns had now to unwind those positions, and as a result of which that caused a bit of a rush to the exit door for a lot of these players out there as well. Club all of that with the most important reason, which is earnings. They missed as well. On Friday we saw Intel fall about 26%. A lot of these US tech companies like Amazon, etc., fell about 9 to 10% as well, because earnings were below street expectations. And the fourth one was here in India as well. The valuations were very high. Remember, it was only on Thursday that we hit 25,000 on the Nifty, which was a fresh record high. We've been outperforming the world as well, and there are pockets of overvaluation in a lot of these sectors like PSUs, railway, defense sectors, and a lot of the companies which saw a big rally already. At 25,000, the Nifty itself was trading at 22 times 1 year forward earnings, which is at a premium to its long period average. So all of that had to come undone. That did come undone, and now with the belief that maybe the Fed will act sooner and the Japanese carry trade being unwound as well, there is a sigh of relief in the market. But definitely the overarching fears keep gains limited as well. So that's something we'll have to monitor, at least in the very near term. Volatility is likely to persist.